You have rice and plantain.
Yes.
You give me rice, plantain, and fish.
That with salad.
No, 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 I don't want salad.
Take away a plate.
Take away.
Okay, how many plates?
You too. You need
Just give me
one,
the
right?
same thing.
Same thing.
Alright.
Now, wait, oh, have you seen this? That they say if you don't pay tax, they'll freeze your accounts.
Please, care. Like, I don't understand. Turn it into ice or what exactly? See, my account is already frozen with SAPA, so this news no be for former people.
See, this tax service, not even that one we used to know. This one is for everybody. This tax is for everybody.
My daughter, which one are they talk about tax? I've been hearing about tax, I don't understand. When I was coming on the way, I heard people talking about tax. I enter bus, they are talking about tax. What is this tax all about? Is it a new government policy that they are introducing to the school? Nigeria with their wahala, everyday wahala.
Mommy, are we all just collectively confused? Because me, I don't comprehend this whole tax thing.
My daughter, until they explain this tax well for me. If not, I don't go pay shishi. If they have freeze anything, let them freeze fuel price first.
Abi?
I swear, like,
Don't tire person.
basically, so nobody actually knows what tax reform is, but everybody is scared of it.
I'm telling you exactly. Oh. Ignorance times Nigeria equals to kingdom confusion.
They go help us.
Amen.
Amen. All right, thank you, man.
All right.
Thank you, man.
Okay, have a
Relax. Nobody is freezing your account today. We are just here to break down the Nigerian Tax Act 2025 into simple layman language. Good day, viewers, and welcome to the Agro Media Studio. I am Ibrahim Muhammad Mustafa, and with me on the show is my colleague, Joshua Lazarus. It is just less than a month and the Nigerian Tax Act 2025 becomes fully effective. That is less than a month from now. So in this video, we will be explaining almost everything you need to know about the 2025 Tax Reform Act. Because the way tax is explained in this country, sometimes you need prayer, fasting, and even a lawyer to understand it. We'll be looking at what tax really is, what the new law expects from you, what the government collects, when your tax is actually due, and the penalty for defaults, confusing areas, and finally, real-life Nigerian examples to show everyday situations. But before then, let's look at, tax. Mr. Joshua, over to you.
All right, Mohammed, thank you very much. As he earlier said, my name is Joshua Lazarus. You are wondering, what is tax? Tax is simply the compulsory contribution you and I make to the government so the country can function. Just think of it like your community dues. When everyone pays, things move smoothly. But when people dodge, everybody begins to suffer, including those who are dodging. The Nigerian Tax Act 2025 states clearly, if money enters your hand or your bank account, the government expects its own contribution. If you don't declare it, penalties and interest will quietly start following you like a shadow. And I know you won't love that to happen to you. All right, since we've understood what tax really is, let's look at the purpose of the Nigerian Tax Act 2025. The Nigerian Tax Act 2025 was signed into law on the 26th of June 2025, and it becomes fully effective 1st of January 2026. That is less than 1 month from now. It is part of the fiscal policy and tax reform framework, the government's big plan to modernize how taxes are collected, make compliance easier, expand the tax net, and remove outdated system. Now, the act aims to clearly identify who must pay tax, define what counts as taxable income, explain allowable deduction, lay out how tax is calculated, strengthen penalties, show categories that are exempted, and importantly, specify when you must take tax. In short, the act brings structure and clarity to a system that used to feel scattered. Now, the big question remains, who must pay tax? Over to you, Mr. Mohammed. Can we look at who must pay tax now?
Of course, yes. Thank you so much. So in looking at who must pay tax, in simple language, if you earn income in Nigeria, you are a taxpayer. If you live in Nigeria, you are taxed based on your worldwide income. If you are a non-resident, only the money you earn in Nigeria is taxed. And this includes salary earners, traders and small businesses, freelancers and side hustlers, POS operators, digital workers, crypto traders, landlords, content creators, service providers, and even influencers ranging from VDM and Gege. and even everybody in between.
So, Mr. Mohammed, let's look at these influencers. You said
Okay.
VDM to Gege. What of Pella?
Of course, just like we said earlier, influencers, we just categorically mentioned VDM and Gege.
So, what do you leave Pella? That is by the way. Let's continue.
Okay, if you don't declare your income, expect backlogs, penalties, audits, interest, and then possible enforcement. Okay, so now moving forward, let's look at allowable deductions and non-allowable deductions. Allowable deductions are expenses you spend in order to make money, right? And this includes transportation for your business, raw materials, staff salaries, office rent, electricity for business operations, equipment, and professional service. But personal expenses are not allowed, and this includes school fees, house rent, home generator fuel, food, and lifestyle spending. If by chance you mix personal and business expenses and the FIRS finds out, they will definitely remove them and add penalties on top. So Mr. Joshua, let's look at the percentages the government collects.
Okay, in looking at the percentages government collects, there are certain categories that are very important that you need to know the government collects. And our first list on the slide is the personal income tax, which is the PIT. The Act uses a progressive tax system. This means you are not taxed on your whole income at one rate. Each portion of your income falls into a different band. First, 800,000 naira at 0%. This part of your income is completely tax-free. The second is 2.2 million naira at 15% tax rate.
I'm sorry, Mr. Joshua, for clarity, more clarification,
All right.
It is important to note that you can only, remit, you can only be taxed, right, after you must have made allowable deductions. You may proceed, please.
All right. The third one we have here is 9 million naira at the rate of 18%, 30 million naira at the rate of 21%, 25 million naira at the rate of 23%, 50 million naira and above, you are taxed at the rate of 50%. This means you are not taxed 15% if you earn 350,000 or 500,000 naira monthly. You only start paying the 15% on the part of your annual income after the first 800,000 naira has been exhausted. Number 2 on our list is the capital gain tax, which is the CGT. The CGT is taxed on 10% rate on profit from selling land, building, shares, and other assets. The third one, we have the value added tax, which is the VAT, at 7.5% tax rate on goods and services. Then we also have stamp duty. Stamp duty is charged at the rate of 50 naira on electronic transfer of 10,000 naira and above, charged for both the sender and the receiver.
Mr. Joshua, if I may ask, do you mean that if I send 12,000 naira to your account, I will be charged 15 naira as well as
yes,
you?
I'll also be charged 15 naira. You can remember that in the previous stamp duty law, only the persons that receive money is taxed 15 naira, 10,000 naira and above. But in this new law, it is interesting to know both the receiver and the sender is taxed on stamp duty of 15 naira.
So is this a good news or a bad news?
It's not a good news to the people that receive money, obviously. Let's look at the when tax is actually due. The number one we have here on our slide is the personal income tax, and the personal income tax is due once a year. You are expected to file in your total income and make your payment of tax once a year. There was no specification on the date in which you have to make that payment. And the number 2 item we have here is the pay as you earn, that is payee. Employers must deduct payee and remit it by 31st January of each year. So make sure that if you are an employee, your employer remits your tax by the 31st day of January of each year. The value added tax, which is the VAT, you must file and pay on or before the 21st of the next month. So the 21st day of the next month, you are expected to make your payment on the value added tax. Number 4, we have the capital gains tax, which is the CGT. The CGT is due immediately after the disposal of your asset within the same year. So accounting period. Sorry, accounting period. So this means that the moment you sell or you sell an asset, either land, shares, whatsoever, you are expected to make payment of your tax immediately after the disposal.
And that is 10%, right?
Yes, 10% of the total amount you sold that particular asset. Then number 5, we look at the stamp duty. The stamp duty is paid at the moment the transaction happens. Just as we said, the moment you transfer 10,000 naira, you are meant to pay 15 naira.
Of course.
And the moment you receive 10,000 naira and above, you are meant to pay 15 naira. So let's proceed, Mohammed.
Sorry, initially it used to be a system where the either your wallet or the traditional bank,
Yes,
they immediately subtract the money from your account.
Yes.
Is it different from this, or it is same process?
it's the same process.
Okay,
It's the
we
same
may
process.
proceed, please.
All right. Now let's look at the real life Nigerian cases. Mr. Mohammed, let's look at the real Nigerian cases we have on the screen.
Okay, in our case study 1 year, Amaka, the makeup artist. Amaka earns 400,000 monthly. That is, she is going to make 4.8 million at the end of the year, right? Amaka tax is not flat at 15%. Her income is taxed gradually across bands. First 800,000 at 0%, meaning no tax for Amaka. The remaining 4 million moves into the next band and taxed at 50% until that band is exhausted. Amaka must file an annual tax return even as a self-employed worker. So this means that whether you work with the government or you're self-employed, the law requires that you pay tax, right? Now, failure to file brings penalties, interest, possible back duty assessment. However, most informal workers have no tax education, yet the law expired full compliance. So let's look at case study 2. Chinedu, the POS operator, right? Chinedu's monthly inflow is 12 million naira, but his actual profit is only 200,000 naira monthly. There's a problem here.
There's a big problem.
Of course. Chinedu's 200 monthly, income flow amounts to 2.4 million at the end of the year.
Okay.
Right? Is PIT, that is personal income tax, is calculated on profit, not inflow.
Okay. Okay.
Not inflow. The government do not charge, Chinedu on the 12 million naira inflow. They only charge Chinedu on his profit.
Okay, that is the 2.4 million naira.
Of course, no. Yes, the 2.4 million naira at the end of the given year,
yeah, okay.
Right? Now let's look at the tax breakdown. First 800,000 at 0%. Now the money remains 1.6 million, which falls under the 15% band. But it only pays on the part of income actually inside that band.
Okay.
Right? If Chinedu does not keep proper records, FIRS may mistakenly take its inflow instead of profit, which is why bookkeeping is crucial.
Yeah, it's very necessary, especially for POS operators.
Of course, of course. But unfortunately, this shows how the law expects accuracy, but the business reality is different. The government needs to, to do better on the law accuracy, right? So over to you, Mr. Joshua.
All right, let's look at Musa, the landlord. Musa earns 200,000 naira monthly from rent. If you calculate 200,000 naira monthly, his annual return is 2.4 million naira. His PIT, which is the personal income tax, follows the same rule. First 800,000 naira at 0%, remaining 1.6 million naira at 15% band. If he sells his rental property, that is the house or whatsoever a property he has, he must also pay 10% capital gain tax on the profit from the sales. Despite this, property owners already faces many levies which make taxation feel heavy for landlords. Let's proceed to case study 4, please. Mary, the crypto freelancer. Mary earns $1,000 to $2,000 monthly on crypto, which she later converts to Naira. Now, if she converts it to Naira as a Nigerian resident, she must declare her worldwide income. And now her PIT follows the same tier, which is the first 800,000 Naira is tax-free. Next portion tax at 15%, 18%, and so on, depending on total yearly income. Unexplained inflows can lead to audits, yet government policies on digital work remain unclear. So we need the government to actually give clarity on this particular part of the tax reform bill.
Yes, because they are young Nigerians
Who end
this contemporary
the
period.
21st century.
Of course, with the technology, right, has advanced to a stage where we get deals, we get jobs over the country.
Outside the country.
So outside the country, sorry. So I think we need more
clarity on that.
Yes.
So all right, let's proceed to case study 5. We have here pay as you earn, that is the payee. Tunde earns 350,000 Naira monthly. That is 4.2 million Naira yearly as a salary earner. His employer calculates his PIT, which is the personal income tax, based on the same band. First 800,000 Naira at 0% tax rate. The remaining 3.4 million Naira falls into 15% band and is taxed monthly as payee. That is pay as you earn. If his employer deducts payee but fails to remit, it becomes a criminal offense, classified as withholding tax revenue, and is punishable by fines and enforcement. All right, Mr. Mohammed, let's conclude. But before then, do you think Nigeria hates paying tax?
Of course, Mr. Joshua, Nigerians do not hate paying tax. What Nigerian wants is clarity, fairness, and evidence that their contribution is making a difference. When the system works and government services improves, tax compliance automatically increases. The Nigerian Tax Act 2025 spells out what to pay, when to pay, and of course, how to pay. It also replaces several old and confusing provisions because the previous tax law were repealed to make the system easier and simple to understand. But both the government and the citizens must play their part for the system to work. So, Mr. Joshua.
All right, before you disappear, you need your tax identification number, TIN. Yes, your TIN, that magical number that tells the FIRS this one is not running away from tax. And guess what? TIN, that is tax identification number, is absolutely free. Just walk into any FIRS office across the country with confidence, not fear. Or you can get it through the Joint Tax Board portal. No payment, no envelope, no Oga Day meeting. And if anybody tries to charge you, tell them you are going to report them to the FIRS officers, DSS, EFCC, and even your village chief. Join all together.
Of course, it is necessary because of the system of the country.
Yes, they will export you.
Now, if any section of the Nigerian Tax Act 2025 is still twisting your brain, of course you are not alone. Half the country is confused and the other half is pretending to understand. So if anything seems unclear, just drop your question in the comment section below and we will break it down as easy as joining 2-letter words.
And do not forget to check the comment section below for the full list of exempted categories and frequently asked questions. Because imagine stressing over tax just to discover that you are exempted. Life is too short for that kind of premium confusion, just as the woman have said in the video.
Okay, thank you viewers for staying with us to the end of the program. I am Ibrahim Muhammad Mustafa.
I am Lazarus Joshua.
And this is Artbo Media.
Goodbye for now.